In this video, I want to discuss Dell Technologies, but before I do that, before we look at the charts, before we look at this article on Dell, I do want to talk about the video I created yesterday, and it was on super micro computers and how they fell 30% this past week due to a report that came from Hindenburg, which is a Wall Street firm that likes to short companies. And they cited how Supermicro was cooking their books, but also a day later, Supermicro came out and said they were delaying their quarterly earnings. And that's never a good sign. Now, getting back to Dell Technologies, because the article that we're going to go over states how Dell can take advantage of Supermicro's mishaps. This is the monthly chart on Dell Technologies, and if I just put my cursor on current price, you can see this huge hammer candle, meaning price went all the way down, nearly came into this weekly buyer's level at $80, nearly dipped its toes before closing near the highs for the month of August. However, you got to put things in perspective. Going down to the weekly chart, we can see how price once traded at $180. So price was cut in half before closing, or should I say a pullback. Now, if you are a bull, good news, you did get a candle close above this downtrend line, which should signify the bottom is in. If that wasn't enough, for the aggressive traders, they could have gotten long, depending on how you draw your zones. Could have gotten long back in early August. How do things look like on the daily chart? The chart suggests potentially price is going to break out to the upside. You are protected below that. This yellow line is the 200-day moving average, which serves now as dynamic support. However, I do want to bring to your attention a level of interest, and that's going to be this daily sellers level at $127. All right, so here was the formation. We had a drop in price. This is a gap down, so that's an extended range green red candle. So drop, base, and then we had another gap down, leg out. So drop, base, drop, or leg in, base in candles, leg out. So this 127 becomes the first target. And that's where, if you got in down at $90, that's where I would look to take some off the table, at least partial. Now let's get into the article. Dell may be positioned to capitalize on recent challenges faced by Supermicro. According to Evecroce, which is an analyst on Wall Street, Evecroce highlights that Dell is uniquely positioned to gain market share in the AI server space, particularly as key customers such as CoreWeave and various companies associated with Elon Musk companies are dual sourcing their production across both Dell and Supermicro. The firm's analysts believe that Dell remains a logical partner for customers who look for better, different supply chain diversity and, crucially, a strong services offering through deployment lifecycle. Now, Evercore projects Dell's AI server revenues to exceed $8 billion this year and surpass $10 billion next year. Dell's advantage in this competitive market is further boosted by its comprehensive service offerings, which include engineering support, management, maintenance, and financial services. As customers mix shifts from Tier 2 cloud service providers to enterprise and corporate customers, Dell's ability to attach services to its hardware offerings is expected to contribute to margin accretion. Now, the analysts at Evercore maintain an outperform rating with a target of 140. Again, Dell is still up despite the leg down. 43% year to date. Let me know what you think in the comments. Did you get in long? Down at 80. Are you thinking about getting long now? Or did you buy the tops? Thanks for watching. Subscribe. Please like the video.